Hello, everyone, and welcome to Daily Pick.
Picture this. The stock market suddenly drops. Red numbers everywhere. Panic headlines on the news. What do most people do? They sell. Fast. Smart investors, they stay calm and often buy more. Here are 9 tips to avoid losing money in the stock market. If you're serious about investing or even just starting out, this video could save you from some of the most common and painful mistakes in the stock market. Let's break them down together, and trust me, number 8 is something even seasoned investors still mess up. Number 1, don't fear market corrections. Look, corrections are normal. The market goes up and the market goes down. But instead of panicking when prices drop, see it as a shopping season for stocks. It might be your chance to grab more shares of high-quality companies at a discount. Then you have 2 choices. 1, lock in profits when the stock hits an all-time high. Or, my personal favorite, hold long-term and ride the growth. Number 2, don't close losses in the short term. If you're seeing red on your portfolio, but the companies you're holding have strong fundamentals, low or no debt, and a solid outlook, don't panic sell. Remember, unrealized losses are not real losses unless you close the position. Unrealized losses only become real when you sell. Think about this, most blue chip stocks bounce back. So if you believed in that company when you bought it, give it time to recover. Unless something seriously changes with the business. But here's a practical tip. If after 1 year, the company still shows no signs of improvement, that's the time to start exploring other options. Number 3, don't rely too much on analysts. Yes, analyst upgrades can move markets. You've probably seen headlines like, XYZ stock up 5% after ABC Bank raised its target price. But remember, they're still just opinions. At the end of the day, no one cares about your money more than you do. So take their insights, but learn how to read fundamentals and charts yourself. Get comfortable with technical indicators. That way you can decide when to buy, sell, or hold. Number 4, don't ignore catalysts. Catalysts are events that shake things up. Earnings, leadership changes, global news, even viral tweets, any of these can move a stock's price. Most of the time, it's temporary. But if you're alert, these dips can be opportunities in disguise. Say a top blue chip stock drops 15% due to a rumor. If nothing's changed fundamentally, that dip could be your buy signal. Grab it, wait for a recovery, then lock in 10 to 12% gains. But please don't let greed push you past that. Number 5, don't sell in panic. Let's rewind to 2020 for a second. Remember when the stock market crashed during the pandemic? People sold in droves. But 3 months later, the NASDAQ 100 hit new highs. Selling in panic is how people lock in losses instead of gains. So next time fear sets in, pause, take a deep breath, and look at the big picture. Sometimes downturns are your best chance to buy cheap. Number 6, don't over-leverage. Now let's talk about leverage, aka trading with borrowed money. Tempting, right? Doubling your gains sounds good. Until the market moves against you. Suddenly, you're forced to sell, even if your stock would have recovered. Leverage can turn a small dip into a big disaster. So unless you really know what you're doing, don't touch it. Stick with what you can afford to lose and invest long term. Number 7, don't forget why you invested. This one's personal. When the market gets rough, take a step back and ask, why did I buy this stock? Was it because of the company's growth potential? Strong fundamentals? Industry leadership? Then hold on to that conviction. Don't let temporary noise drown out your original reason. Unless the business changes for the worse, you might just need to do nothing. Number 8, don't be impatient. One of the most underrated investing skills, patience. People often jump ship when a stock doesn't move in a few months. But good companies take time to grow. If you've done your research and the company's still solid, give it time to perform. Not every winner takes off immediately. Don't sabotage your long-term returns with short-term thinking. Number 9, don't trade if you can't handle risk. Here's the truth, the market is unpredictable. And like Jim Cramer said, every once in a while, the market does something so stupid, it takes your breath away. If you can't sleep at night after seeing your portfolio down 10%, maybe trading isn't for you, and that's okay. Invest within your risk tolerance and never put in money you can't afford to lose. Investing isn't about being perfect. It's about being consistent, staying calm, and learning from your mistakes. If you've made some of these before, hey, that's okay. We all have. What matters is what you do next. If you found value in this video, hit like, subscribe, and share this with a friend who needs to hear it. And let me know in the comments, which of these 9 proven tips do you relate to the most?